Hello and welcome to the look ahead for Thursday, the 3rd of July with me, Fiona Cincotta, Senior Market Analyst at City Index. So in the European session, we'll be watching out for PMI releases. These are the secondary releases, so they don't tend to be as market moving as the preliminary numbers. So we've got that for the Eurozone and also for the UK, as well as the ECB minutes. But again, the ECB minutes are considered to be rather stale, given that we've had so much from Christine Lagarde and ECB policymakers in the recent Sintra Central Bankers Forum. So big focus tomorrow will be US non-farm payrolls. But just before we get on to that, just want to talk through what's going on with the pound US dollar. We've seen some big moves as far as this is concerned. So this is the chart here that you can see for cable. We've seen the pound fall really sharply today, down around 1.5% from 137.50 to current levels, or a low of 135.60. And basically what happened here is we had that we had Prime Minister's question time in the UK. The Prime Minister failed to say that Chancellor Rachel Reeves would be still in her position come the next general election. So just raising concerns over the health of or stability of the government, and also the health of the UK government finances. And that's after this welfare vote basically saw the government give away many more concessions than what it was expecting to have to do, which basically means that it wasn't making the cuts that it was expecting to make. Therefore, its fiscal headroom has basically evaporated, is what we've seen, owing to expectations of lower growth as well across the rest of the year, putting the government in a bit of a difficult situation. Keir Starmer was unable to say that the UK wouldn't be seeing tax hikes come the autumn statement. So a lot of questions here, over the stability of the government, in the sense that the Rachel Reeves could be on her way out, and potentially her replacement may not stick as rigidly to the fiscal rules. We've seen a reaction in the gilt market. Gilt yields have jumped up to 4.61%. The pound has fallen heavily, as we're seeing here, against the US dollar, but also against the euro and other major peers. And the FTSE 250, the more domestically focused index, is also down sharply. So a very big reaction. Now, interestingly, we've also got the US non-farm payrolls today, and we're seeing some strength in the US dollar today anyway. But actually, just as far as what we're seeing in this chart, we are still within that rising channel. We tested the 50 SMA there. We've got this bearish engulfing candle, which is quite ominous, but we are still within that rising channel. So there's no sign of a breakout just yet. A level to around the 134.50 level. So we've got the 50 SMA there at the 135.50. If we break below there, then I'll be looking for the 134.50. That would be a sign that we could be on the way down for a deeper sell-off. We've also got, as I mentioned, the US non-farm payrolls. Now, whilst we're seeing strength in the US dollar today, that's quite interesting. We've seen a lot of we've seen weak data come out of the US now, particularly weak data, in fact. So we saw ADP payrolls come in at 33,000 loss in positions. So that's well below the 95,000 gain that was expected. We also saw a downward revision to last month's ADP payroll. This comes on the back of comments from Fed Chair Jerome Powell yesterday at the Central Bankers Forum, where he actually said that a July rate cut isn't off the table. Now, if we take those comments that a July rate cut isn't off the table with the really weak ADP payrolls, this has got us starting to think, well, actually, maybe the Fed's going to move a little bit earlier if we get very weak non-farm payroll numbers tomorrow. If we do, then we could see that the US dollar actually gives back some of those gains, which may stabilize this sell-off that we have seen in this pair. So I'm just going to pull up now the NASDAQ. This is the NASDAQ as we are just hovering around record highs still ahead of this data tomorrow. Now, if we do get a weaker expectations for 110,000, that's down significantly from the 139,000 last month in May, sorry. And then we also saw significant downward revisions for the 2 months prior to that as well. So there is definitely a sense that the jobs market is weakening. Unemployment's expected to tick higher to 4.3% from 4.2%. Average earnings are also supposed to soften just very slightly to 0.3%. So, but if we do see weaker than expected non-farm payroll, significantly weaker, sub 100,000, or even more, weaker than that, it's interesting. That's what we're watching. Is this going to be the first sub 100,000 non-farm payroll? And well, that we've seen for a very long time. If it is, that again is going to raise the prospect, but actually maybe a July meeting is more live than we're actually giving it credit for. The market's upped its interest rate expectation cuts to 27% from 20% just before today's data. Weak non-farm payrolls could see that expectation rise further, which would push the NASDAQ potentially back up to record highs and back towards that 23,000, because the prospect of rate cuts is obviously beneficial for business, and particularly tech tends to perform well in a low interest rate environment. So we're going to be watching that. Other thing that we're going to be watching here is US trade deals. We're starting to get a few. I think I just saw headlines about Vietnam before coming on here, 20% deal. The deadline's coming close. We're the 2nd of July, going into the 3rd of July. Deadline's 9th of July. So the clock is ticking. Japan isn't looking terribly confident that there'll be a deal done, or shall I say Trump's not looking confident that a deal that will be done with Japan. But India apparently is close to crossing the mark. This, as I said, NASDAQ, if we're going to get that slightly weaker than expected data, or weaker than expected data, could expect to see NASDAQ push higher, back up or to record highs towards 23,000. Key level of support there, 22,245. That was the high that we saw back in February. We get a break below that, it's just going to bring us back into this relatively familiar channel that we've sort of been trading in, with the next downside outlook at 21,500. Break below there will create a lower low and changes the structure of the chart. Just finally, let's just have a look at euro US dollar, because although we've seen some US dollar strength today, it hasn't really made a mark at all on the euro US dollar. Euro US dollar continues to push higher or hover around those 4-year highs that it's trading at the moment. ECB only expected potentially to cut rates once more this year, as inflation is on target at 2%. But again, still no trade deal here. So they're going to be pushing, EU is going to be pushing to get a political deal done so they don't get those full-on reciprocal tariffs that they've sort of been fearing a little bit when the deadline comes on the 9th of July. So, it does appear data-wise, we've got relatively slow growth and stagnant growth in the Eurozone, which is what the PMIs are going to confirm. Problem being is if we continue to see euro strength particularly against the US dollar, not at these levels, but if we get above that 120 level, we've had a couple of ECB policymakers talk about how that's not going to be ideal for exports, which tend to be the sort of driving economic drivers in the Eurozone. So that could be detrimental to, or could be an obstacle to getting Eurozone growth back on track, which has been stagnant at best over the recent period. So none of these levels. 118 still okay, but if we get above 120, I think there might be some more concerns from the ECB that we hear. But as I said, tomorrow PMIs in focus, ECB minutes not terribly market moving, but it will likely be the US dollar focus on the non-farm payrolls, which will be the biggest driver here. On the upside, looking for, if we get weak data and we see more US dollar weakness, 118's level on the upside that we're watching for. On the downside, support there at 115, 116 is quite an important level. That was the high sort of that we saw back in April, and we saw it in early June as well. So that is everything from me. I hope you did like the video. If you do, then please do give the video a like. And for more videos like this, then please do subscribe.